Hi, this is Brad Powell with Right Angle Trading. We're looking at intraday trading ETFs as we teach in the ETF Trader's Edge. And in our last webinar, we talked a lot about knowing what's in play, especially during the summer. We know the TNA, TZA, the Russell 2000 ETFs will always produce a lot of trades on an intraday basis. The S&P 500, UPRO and SPXU, triple leveraged ETFs. But we're constantly looking for other markets that are in play that give us good trading opportunities intraday on a 5-minute time frame. And one thing we talked about in our last webinar was that the financial sector would be in play because of the FOMC policy statement coming up and the ECB statements regarding what they're doing regarding European debt situations. So we've been monitoring the FAS and FAZ, which are the triple leverage long and short ETFs for the financial sector. And we're looking at a 5-minute chart of the FAS, which is the long triple leverage ETF. And on July 26th, it was a pretty flat, choppy day, and we got, a little trend developed late in the day. We didn't really get any trade setups, so we're looking going into Friday, July 27th, 2012, and we got a gap up early in the day, kind of a continuation of the trend started the prior day, so it looked like we were going to have a pretty strong trend day up. And as we approach about an hour after the open, hour and a half after the open, we get really a perfect trade setup. So we have 2 of our 5 indicators on, just looking at our most simple, basic, straightforward trend continuation trade, which is a higher low in price after having established a higher high up here. And then our red indicator gives us this slingshot trade, a big windup, a much lower low in the red indicator while we have the higher low in price. And we're looking for a key price pivot, which came right on our green indicator, which is what we use to look for these key price pivots. So we get a long signal at about 87.57, and the trade very quickly goes our direction. And we take it until we get an exit signal. We have other indicators that indicate when we should exit a trade as the trade becomes overextended, 2 other indicators that we use primarily for exits that aren't on the chart. So we get our exit signal here. The trade makes a little over $1, about a 1.3%. It looks like we've got a pretty strong trend working. So we're going to look for another continuation trade. And sure enough, we get another setup, lower low in the red indicator with a higher low in price, very close to our green indicator, looking for these key price pivots with the trend. And this trade, we're kind of going to gradually move our stop up using the green indicator for our stop adjustment. And we kind of get into lunch, New York time, and we expect a little consolidation. And we're looking for that, trying to stay with the trade as long as we can. And sure enough, we get a huge after lunch breakout late in the day on a Friday, and we get an exit signal on this trade, which gives us about 2.8%, about $2.50 on the trade. So that was our second trade of the day. And this is a really strong trend now and very high volume for a summer Friday. So we're kind of looking to see if we get one last trade set up later in the day. And sure enough, we get a third signal, the same type of signal. And it's not uncommon when you have a strong trend just for these signals to occur over and over and allow us to trade in and out with the trend, usually re-entering at a lower price than where we had previously exited. So we get our third trade setup of the day. We're going to try to take it up to about, to as close to the close as possible. We get an exit signal about 25 minutes before the close. Our third setup, a little over 1% on that trade. So we had 3 trade setups, all with trend on the day. Our risk on each trade was never more than 0.5% on each of these trades because we know where we're looking for these key price pivots to minimize risk, especially in the triple leveraged ETFs, and we get over 5% on the day, so we're averaging over a 3-to-1 reward to risk ratio. We typically look for the 2 to 2.5 1. This was a good trading day, good strong trends, and we're able to get over 5% on the day just on 3 quick trades in one market, the financials, which have been very much in play as we've talked about in our webinars, our training webinars and our live trading days. Anyway, that's a look at the ETF Trader's Edge and what we do on an intraday basis. If you'd like more information regarding any of our trading products, visit www.rightangletrading.com and feel free to contact us if you have any questions. Thanks.